Hey everyone, it's time we all stepped up and poured more into smart investments to spark real economic momentum and build a stronger future for generations to come. Picture this: the global economy is like a massive engine that's been sputtering because businesses aren't fueling it with enough fresh capital. According to a fresh warning from the OECD, weak corporate investment is putting the brakes on worldwide growth. And if we don't turn this around, we're looking at slower progress across the board. Net investment in advanced economies has plummeted from 2.5% of GDP before the 2008 crisis to just 1.6% now, and the pandemic only made it worse. Only a handful of countries like Israel and Portugal are bucking the trend, while the rest are lagging 20% behind where they should be if old patterns had held. This isn't just numbers on a page, it's about jobs, innovation, and keeping the world moving forward. Let me break it down for you. Businesses are holding back because of endless uncertainty. Financial crashes, pandemics, trade wars like the ones stirred up by recent tariffs, and policy flips that make planning feel impossible. The OECD points out that a spike in economic policy uncertainty can slash investment growth by a full percentage point in just a year. Companies are hunkering down, focusing on quick wins like boosting shareholder payouts instead of betting big on new projects, factories, or tech. Take the UK water sector. They've shelled out £83 billion in dividends since privatisation, way more than invested in infrastructure, leading to all sorts of headaches. Even giants like BP are cutting spending to protect dividends under investor pressure. Meanwhile, digital investments are rising, but they're not enough to offset the drop in physical assets. If this keeps up, the OECD says we could see investment trimmed by another 1.4 percentage points by next year, dragging global growth down from the already modest 3% forecast. But here's where it gets exciting. I've been thinking about this, and I have a novel idea that could flip the script on how we approach finance and investment. Let's call it the Investment Cascade Fund. Imagine a new type of mutual fund or ETF designed specifically to reward companies that commit to aggressive long-term investment over short-term payouts. Investors pool their money into this fund, which only buys stakes in businesses that pledge at least 20% of profits back into growth initiatives like R&D, infrastructure, or workforce training. To make it juicy, the fund uses smart contracts on blockchain to automate bonuses. If a company hits its investment targets, shareholders get enhanced yields or priority dividends tied directly to the growth metrics, not just profits. This creates a cascade effect. More investment leads to more innovation, which boosts company value, which in turn attracts more investors, creating a virtuous cycle. Governments could sweeten the deal with tax credits for participants, reducing the risk from uncertainty. It's like turning the tension between shareholders and long term growth into a win win, where everyone profits from sustained expansion rather than quick cash outs. Think about the potential impact. In a world battered by shocks, this fund could act as a buffer, diversifying across industries and regions to hedge against policy whiplash. For example, if trade tariffs hit manufacturing, the fund shifts toward resilient sectors like green tech or AI, all while enforcing those investment pledges. Small investors like you and me could jump in via apps, democratizing access and pressuring Big Core to prioritize growth. Based on OECD data, if we could lift investment back to pre-crisis trends, we'd add billions to global GDP. My idea draws from existing tools like ESG funds, but goes further by laser focusing on tangible investment metrics, tracked transparently. It's not just about feel good investing, it's about measurable cascades of capital that sustain economies. We've seen how low interest rates post crisis should have sparked more projects, but didn't. This fund fixes that by aligning incentives directly. Now, let's talk real world application. Say a tech firm joins the Investment Cascade Fund, they commit to reinvesting in new data centers, and in return, the fund's algorithms monitor and reward them with lower fees or bonus shares. Investors get dashboards showing real time impact on growth rates, making it engaging and transparent. For countries like the US or UK, where uncertainty from elections or Brexit lingers, this could stabilize corporate spending. Even in emerging markets, it might draw foreign capital by guaranteeing disciplined investment. The beauty is its scalability. Start with a pilot fund worth $1 billion, prove the model, and watch it explode. Critics might say it's too idealistic, but look at how impact investing has ballooned to trillions. This is the next evolution, tailored to our post pandemic reality. Wrapping this up, the OECD's wake up call is clear. Without more business investment, growth stalls, and we all pay the price. But with ideas like the Investment Cascade Fund, we can channel uncertainty into opportunity, rewarding bold moves that build tomorrow. So, if you're an investor, entrepreneur, or just someone who cares about the economy, let's make this happen. Start by evaluating your own portfolio and pushing for more growth focused strategies. Hit that like button if you're ready to invest in a brighter future. Subscribe for more finance deep dives and drop in the comments. What's one investment you'd make right now to kickstart global growth? Thanks for watching. And remember, the time to act is now.